We made a massive miscalculation this last year. We ended up doing short-term rentals on a pretty big scale down in San Diego. So we picked a vacation market. We went out, we rented properties directly from a landlord, and then we would turn around, furnish them, and rent them out as a short-term rental. So it's called rental arbitrage. And very quickly realized that the market was very saturated and that the data we had trusted to get our metrics on what we thought it would get for cash flow and returns was off by a factor of 2. They ended up starting to lose like $4,000 or $5,000 a month.
Brenna is an elite mastermind member, and we're going to start bringing on more elite mastermind members because they're just kicking ass. And Brenna's one of those people that, like, I always say, like, if I could buy stock, there's certain people I want to buy stock in, like the person. And Brenna's one of those people. And so super excited to have you on. Just want to dig into your story, talk about how you got into real estate, but also talk about just like your mindset so far, what you've learned in the elite mastermind, where you see yourself going. Maybe we'll dive into a couple struggles. I know you had some bumps along the way, which is cool too. But yeah, let's dig in.
I'd like to start with your story. Kind of how did you get into real estate? And of course, what were you doing before real estate?
I am from Colorado originally, live in Oregon now with our family, 3 kids. And I did not start out in real estate investing. I started out in a nice W-2 job. I came from middle class America. My parents were engineers and my mom was actually the breadwinner in our family. And so my dad was doing the laundry and running us to school. And then my mom was out there running the world and breaking the glass ceiling for women in engineering field. So it was a very interesting childhood growing up, but very smart parents, and they really pushed me to be creative and to be an entrepreneur. My dad was the executive director of the Rocky Mountain Inventors Congress at one point. So he was out there always entrepreneur doing things like that. And so over the course of the years, I met my much better half in university, and his name's Eric, and we ended up getting married. And our first real estate investing experience was buying my childhood house and spending our first year of marriage remodeling it. It was cool because Eric's dad was a general contractor and built spec homes and owned like 30 units. So that's how we got the real estate investing mindset going all those years ago. We missed an opportunity. Eric's dad was getting ready to retire. He was fed up with his apartment buildings. He was just done. And he's like, I'll sell them to you guys. Just buy the apartments. And we didn't know enough about real estate investing. And so we're like, oh, no. Let's not do that. That sounds exhausting. Just pennies on the dollar. It was the missed opportunity. And so we ended up passing on it. But at the same kind of juncture, maybe 6 months down the road, one of our friends who we really looked up to was retiring from a very successful career in the Major League Soccer. And he invited us to invest with him. And we're like, well, we're not ready. We're still investing ourselves, but like, tell us more. And he took us under his wing and mentored us. And he got us set up with mentorship circles and investor groups here in the Portland area, and like really got us started with like, hey, here are the first 4 books you need to read. So somebody reached behind them to pull us up with them. And that was a really special opportunity for us because that's what opened our eyes to real estate investing.
Do you remember what 4 books those were that he recommended?
Yeah, the first one was a Brandon Turner book, like How to Invest in Real Estate. The second one was Rich Dad Poor Dad by Robert Kiyosaki, which is a very common one. The third one was Frank Elliott's What Every Real Estate Investor Needs to Know About Numbers, I think is what it's called. And it's just basic, real estate investing math. And then the kind of bonus add-on that he recommended was The Richest Man in Babylon.
So you read those 4 books and then what?
So we got on a forum for real estate investors. And we're like, where's a good market to start? And we picked Toledo, Ohio, because it was a high renter population, a price point which we could afford, and seemed to just be a good cash flowing market. So I had still never been to Ohio, but 4 years ago, we bought our first property. It was a single family house. And we bought it for maybe $100,000 and got a renter in it. And about 2 or 3 months later, we turned around and we bought a triplex in Toledo, Ohio as well. So we started off with the long-term rental space. And it's been a lot of great lessons about long distance real estate investing. But before we did it, we read books on it. We learned about the how to put together a team in a different state. And we weren't afraid to just start. So at the time, we went to biggerpockets.com. We looked at top 10 real estate rental markets for cash flow. And Toledo was number 6 on that list. And so we then looked at the jobs that were in Toledo, Ohio. We saw, wow, there's university, there's a lot of medical, there's tons of manufacturing. We looked to see like how many people in Toledo, Ohio rent their houses. It was at like 63%. So we know most people rent in this marketplace. And then we looked at the price point to buy a house and we thought, well, wow, that seems very approachable. So instead of getting into analysis paralysis and not taking any action, we just said, let's find one. And so then we went through, again, bigger pockets. We looked up realtors in Ohio and Toledo who were, real estate investor friendly. And we found one that really walked us through the project. So we would do FaceTime walkthroughs and within 4 or 5 houses, picked one.
How important was that taking action part of it?
I think so often people are thinking like, well, what if I don't buy this house? Or like, what if this wholesale deal isn't the right one for me? Or what if I'm wasting this person's time? And that's not the truth. The truth is that this person needs to sell that house. The broker needs to make money. Everyone gets to generate revenue when you take action. And so a lot of people stand to gain by you spending the time and asking questions and learning the process. We did that, but then we're like, no, we need more money. So let's go flip some houses. And at 0 to 100, of course, that's not the long-term way to do it. It's good for hustlers, but it's another full-time job. And so we bought a house that had a fire in it in the garage, and it was down to the studs up on Mount Hood. And that was a really fun investment project. So we got to put together a team. We got to sharpen our skills on how to run a flip. And we did really the unthinkable. We actually took a house which was literally down to the studs and got it rent ready in 10 weeks.
Wow.
Our contractors could not believe it.
Yeah. Get a crew lined up.
Yeah, we had a really good set of contractors. Yeah, for sure. But we weren't afraid to also roll up our sleeves and go in there and be like, hey, the trim needs to get done. Let's get up there. So our kids learned how to put in trim. They learned how to lay LVP flooring. They can build furniture now because it became a short-term rental. And so a really good book for that is the book on flipping houses by Jay Scott. That really gave us the framework for how to run a quick rehab and a flip. And that really impressed our contractors. It impressed our realtor. Everyone who saw what we were able to do in that 10 weeks was just stunned. And so we knew that model worked, and we did the BRRRR method, which is buy, remodel, rent, refinance, repeat. So we actually invested maybe $100,000 into that. We bought it at $399. We put $100,000 into it, and then we refinanced it, and the value was $750,000 for that property. So we were able to get that investment back to go then do it again.
What are you focusing on today? You mentioned mobile home parks. I know there's a lot of mobile home park investors within 0 to 100, including myself. Travis and Mitch also own multiple mobile home parks in their portfolio. What are you investing in today? What are you looking to invest in? And why mobile home parks? We
made a massive miscalculation this last year. We ended up doing short-term rentals on a pretty big scale down in San Diego. So we picked a vacation market. We went out, we rented properties directly from a landlord, and then we would turn around, furnish them, and rent them out as a short-term rental. So it's called rental arbitrage. And although we had learned a ton about that area in terms of that real estate niche, we got out there and set up 3 pretty quickly. It was like March, August, September that we opened up these rentals, and very quickly realized that the market was very saturated and that the data we had trusted to get our metrics on what we thought it would get for cash flow and returns was off by a factor of 2. And so what I would say to those who are looking to do cash flow through real estate, especially in the arbitrage, is be very, very careful with your data on that. So although we were able to invest, I think we put something like $30,000 into these 3 properties, or $40,000 to get them situated. They ended up starting to lose like $4,000 or $5,000 a month very quickly.
Yeah, that can add up.
Yeah,
quick.
It goes pretty quick. So I remember working with the 0 to 100 group and talking through this problem. I think you specifically gave a few really good strategies to get out of that. Get a midterm runner in there, cancel the lease, like move out, like move on. And just having a group to run those scenarios past and to think through things, not from, my scarcity mentality shoes where, we're losing $5,000 every month, but to say like, no, wait, time out. How do you do this? Don't just feel stuck, get in there, figure it out. So that kind of led us all the way back around to, we said, no more, not another day, never again are we going to be investing in a not passive income asset. And so we took all the skills and all the knowledge that we had done for deal hunting, for finding off-market deals, for finding flips, and we repositioned that into looking for mobile home parks. And so we had hired VAs to find off-market deals in Oregon. We had done ringless voicemail campaigns to find wholesale deals. We'd just really built up a deal flow funnel to find deals. And so we've engineered that now to be in the mobile home park space. And it's a different space because you've only got 40,000 mobile home parks in the United States, thereabouts. And they're becoming scarcer and scarcer as time goes. And so when we look at it, we see that, hey, you've got a limited resource. They're in demand because they're affordable housing. They're recession resistant. If you look at the data over decades and decades. They do very well through recessions. They're not super sexy, so it doesn't attract as many investors. But when you do get a park, there's the opportunity to do a lot of repositioning and operational improvements. And so we reach out to mom and pops who are just ready to retire. They don't, they collect their lot rent by cash, and they know everybody by name, and they haven't raised rent in 10 years. And, they just let all the pads go vacant. And so there's just a lot of ways to improve on these mobile home parks. And so that's really interesting to us, because it could take all of our skill sets that, on the path we've got of, hey, how do we systemize? How do we operationalize and get lot rents up to markets? How do we help our tenants find ways to pay that don't involve paying cash every month? And what are the infill opportunities? We're not afraid to bring a home into a park and to get it rehabbed. We know how to flip houses. And so there's a lot of our core competencies now that we've learned along the ways that we can bring to the mobile home park space.
And how are you finding these potential sellers, and what's that conversation look like?
Yeah, let me break it into 3 tiers. Like, I have $0 to put into this. I'm brand new. I don't know what I'm doing. And then kind of like, I'm ready to invest in, and why we do it that way. And then like the next level, if we had more money, what would we put into the machine to build deals? And so if I was talking to somebody who doesn't even know where to dig in, doesn't know where to start, find a mom and pop deal, the mobilehomeparkstore.com is a great place to start, and just to see what deals are out there, and to start looking at mobile home parks and to say like, hey, this one's attracted me, this one's not. And then from there's nothing that beats picking up the phone and just talking to a seller. And you can tell online if the seller's a broker or not, because it'll say, licensed broker, or it'll say like Edna. You just call up and you're like, hey, you're selling your park, like, tell me about it. And you just start familiarizing yourself with like what that conversation looks like. Not with the idea that you're going to make an offer on this park, but just to get used to that process of like, hey, you pick up the phone when you see a deal and you just ask questions. So then once you use the techniques earlier that we talked about, like deal find, and be like, hey, this is our market that we're going to be operating in, then you can just look up mobile home parks in Toledo, Ohio. And you can see all the mobile home parks that are in Toledo, Ohio. Pick up the phone, say, hi, no, it's out of the blue. Would you be willing to accept an offer on your home, your mobile home park? And people will say yes or no, or like, I'm not the manager, talk to Scott. The conversation going.
Calling the listed ones, or were you just calling the ones that had Edna's name on it?
Oh, like just doing like a Google map search, Toledo, Ohio mobile home parks. That's free. It's a list that's free. People want their mobile home parks to be found because they're looking for tenants. And so that's a good way. If you're looking to buy locally, drive around. Go drive to the mobile home park that you're interested. Drive around, see if it's in good shape. If there's tenants outside, you just roll down your window and be like, hey, do you guys like living here? Like, tell me about this park. Like, who owns it? Like, I'd love to talk to them. And oftentimes you can get a phone number that way. And so there's kind of like the $0 approach. Go online, join Facebook groups, look for mobile home parks on Facebook, go out to Craigslist, see who's listing homes in their park. That's another great way. That's free to go find mobile home parks. There's no reason you have to spend money doing it. It just takes more time. And what I don't have is I don't have time. We've got, we're both full-time employees right now for our W-2 jobs, and we're doing real estate investing, and our highest values are 3 kids. And so whatever they need comes absolutely first on the list. And so we don't have time. So what we instead decided to do is, hey, we're going to put $1,000 a month into deal hunting. And what that looks like for us is we pull lists. We have people go out and we'll say, hey, we want the list of all the parks in Ohio. And they'll pull that list for us. And then we have VIs do it. We have VIs do it. We have local contractors. There's lots of people who are out there to do that kind of work. We have several VAs that work out of Egypt and Italy. And so we'll farm that out to them. We'll say, hey, this is what we want. So we will give them either a list that we've pulled, or we'll do a ringless voicemail campaign. My job as a buyer is to find the vehicle in which you'll respond. And so the first is a ringless voicemail. If you don't respond to that, I've got a cold caller who's going to be calling this week and saying like, hey, following up. We still really want to talk to you. We're real people. We'd love to have a conversation. If you don't follow up still, and then we whittle down on that list and we're like, you know what? You're in our buy box, Gabe, with your park. This is a park we really want to pursue. I will send a letter, and it is going to have handwritten, hey, Gabe, this is a little bit about us, who we are. We really are trying to find a park. This is generational wealth building for our family. Could we talk? I'm out there 2 hours a day, deal hunting. And this is like nights and weekends and lunch hours on the fringes, reaching out to brokers. I have a broker list that I cultivate and I add names to. I review all the deals that come in my inbox. I get stuff in from wholesalers. So there's a lot of funnel coming into us so that then we can get a deal. And so last week we had a lead coming from ringless voicemail. It's a guy, he's got $1 million park, Southern Oregon, looking to sell. He's got 2 properties before he's completely, he's leaving Oregon for various reasons. And so I said, what's your other property? And he's like, well, it's a 140 unit storage unit out in Madras, Oregon. And I was like, would you be willing to sell them as a package? And he's like, I sure would. That would make my life so much better because then I could 1031 exchange into something meaningful instead of trying to cobble together the timing. Like, it makes my life better. I'll give you a great deal on it.
Being one of the 0 to 100 elite members, I'm curious to what some of your biggest takeaways are or some of your biggest mindset shifts since being part of the 0 to 100 elite mastermind.
One of them is the calculation of time. And I remember doing that. I went to the retreat in the spring out in Hood River. And what was really incredible about my hourly rate, essentially. So up until this point, I was like, oh, it's just my salary divided by the number of hours I work in a year. And we sat down and we talked about, no, okay, let's look at a deal. So you buy let's call it a $750,000 mobile home park. And because you looked at the NOI correctly, you stabilized it, you got in a few tenants, you make all these adjustments. Now it's appreciated to $1 million asset. So you take that $250,000 of equity, your acquisition fee, how much cash flow it's bringing in, and it took you maybe 150 hours to put together that deal. Well, now all of a sudden your hourly rate's about $2,000 an hour. And that's a frame to set out there to say, okay, my time is now valued at $2,000 an hour. So what am I willing to do and what am I not willing to do at $2,000 an hour? And that changes how I operate in my day. So that's been a big mindset shift. Another one is that lazy repositioning to say, okay, what can we do quickly with an asset to get it repositioned with the least amount of effort? So before I was like, we got to get in there, we got to rehab it, we've got to, put it together as the best shiny new short-term rental that we can possibly get. And then realizing like, no, you just need to see the opportunities and look for those opportunities and do those lazy repositions.
When you say lazy reposition, what does that mean for our listeners that have never heard the term lazy reposition?
So easiest way to do a lazy reposition is to look at under market rents. And so you've got a mom and pop, they just charge $200 per lot for the last 20 years. Well, in the market space that, let's call it, it's $300 a month. So you take those 20 pads and you just increase the rents over a shorter period of time to get them closer to market rents. So let's just say you increase it $100 a month per those 20 pads. That's $2,000 a month that you raised the rents. And so over the course of the year, that property is now making you $24,000 more a year. And what that matters is that when you go to refinance that property at the bank, trading caps are often around 7% and the mobile home park safes. So now you have taken that asset, you've increased the net operating income by $24,000, and that increases the value of that park. The 7% cap rate, that would be like $300,000. I mean, it's zany what you can do. So now the bank will say, hey, we'll give you a new loan on that property. You do a cash out refinance and you get that initial investment that you put into that park back so you can go find your next park.
If you had one piece of advice for a new investor, someone that a lot of people reach out that they're interested in real estate, they want to get involved, they want to start investing, they don't know where to start, how to start. I mean, you mentioned books, you mentioned masterminds. When someone asks you like, hey, Brenna, I love what you're doing. You went for it. You wanted to invest in real estate and you took action and invested in real estate. But I want to get started. What do I do? Like when they ask you, how do I get started? What do you tell them?
So for the people who are broke as a joke, running some books from the library and just starting and educating yourself and taking action. You can buy an RV, you can flip an RV, you can flip a car, you can flip a mobile home. You can get into your first investment with 3% down. Like there's no excuse to not get started. So that's where I'd say a broke as a joke. If you're a high earner like Eric and I are, and you don't have time, invest in other people's deals. That's a great way to make money. You get the depreciation, you get the cash flow, and eventually you get your investment back. And they usually have much higher internal rate of returns than if you just had your money sitting in the 6% stock market. So it depends on who comes up to us and asks the question. But for the middle ground, for like people who are hungry for it and have a little bit of money, join the mastermind. And I'm not like saying that to sell 0 to 100, but join a tribe, join a mentorship, a pod, get in there, get around proximity of people who make it look like a Tuesday.